All right, so today we're going to do a deep dive on Larsen Toubro,
Okay.
or L&T, as they're better known.
Yeah.
And you want to know if they're a good investment or not?
Sure.
So we've got some excerpts from Screeners, which is like a financial analysis website.
Okay. Yeah.
And we're going to see what we can find out about them.
Great.
So, just as a quick intro,
Yeah.
L&T is this huge engineering, procurement, and construction company.
Mm-hmm.
So we're talking like infrastructure, power, even defense and IT.
Wow.
They're involved in all sorts of projects, both here in India and around the world.
Yeah, they're a really major player. And you can tell just by looking at their market cap,
Oh, yeah.
it's almost 5 lakh crore,
Wow.
which is huge. And that definitely makes them stand out in the market.
Yeah, that's no joke. All right, so let's get down to brass tacks here.
Sure.
So their stock is currently trading at around 3,604.
Okay.
And over the past year, it's been as high as 3,949 and as low as 3,035.
Gotcha.
So that's a pretty big swing.
Yeah, it is. It definitely indicates some volatility there,
Yeah.
which is something you always want to consider as an investor.
For sure.
So Screener's given us some key financial ratios to look at.
Okay.
We've got a PE ratio of 36.8, a book value of 649, a dividend yield of 0.78%,
Right.
and then an ROCE and ROE of 13.4% and 14.7%, respectively.
Okay, I'll be honest with you. Sometimes these numbers, they just kind of they go right over my head.
Yeah.
So can you just break it down? What exactly do these ratios tell us about the financial health of L&T?
Sure.
And, more importantly, what do they mean for someone like me who's, thinking about maybe investing
Absolutely.
with L&T?
You're right. These ratios can seem like a lot of jargon.
Yeah.
But they actually paint a pretty interesting picture.
Okay.
So let's start with the PE ratio.
Okay.
Think of it like this. The higher the PE ratio,
Yeah.
the more that investors are willing to pay for each rupee of earnings.
Okay.
So 36.8 is on the higher side. Now, that could mean that the market is really optimistic about L&T's future, or it could mean that the stock is overvalued compared to its earnings.
Gotcha.
So we're going to have to dig a little deeper to see which one it is.
Okay, that makes sense. Now, the dividend yield is only 0.78%.
Yeah.
That honestly doesn't sound that great to me.
Right.
Should I be worried about that?
I wouldn't say worried.
Okay.
The dividend yield shows you the return that you can expect just from dividends.
Right.
So 0.78% isn't huge, but it is a factor.
Okay.
Especially if you're someone who's looking for an investment that gives you some regular income.
Right.
But we need to balance that against, their growth potential and everything else that we're looking at.
Gotcha. All right, so what about those ROCE and ROE figures?
Okay, so those are all about efficiency.
Okay.
So ROCE tells us how well L&T is using its capital to generate profit.
Okay.
The higher the number,
Yeah.
the better they are at squeezing profits out of their investments.
Gotcha.
So 13.4% is decent. It's not spectacular, but it suggests they're using their resources reasonably well.
Okay.
ROE is very similar. It's how effectively they're using shareholder investments to generate profit.
Right.
So 14.7% there, again, fairly solid.
Okay, so decent efficiency, not a super impressive dividend.
Yeah.
What else is Screener telling us?
Well, they've highlighted some pros and cons, which is always helpful.
Okay.
One of the positives is that they have a healthy dividend payout ratio
Okay.
of 34.6%.
And what does that tell us?
That means that they're sharing a good chunk of their profits with their shareholders.
Okay.
It means they're pretty shareholder friendly,
Right.
which is always a good sign for potential investors.
Yeah, I like the sound of that.
Good.
They also mentioned something about a reduced working capital requirement,
Yes.
down from 55.8 days to 30.6 days.
Right.
Honestly, I'm not really sure what that means.
So working capital is basically the money that a company needs just to run things smoothly day to day.
Okay.
So the fact that they've reduced that requirement so much means that they're managing their short-term finances a lot more efficiently.
Okay.
It's like they've streamlined their operations,
Gotcha.
which is a positive thing.
Okay, so efficient operations, a decent dividend payout. I'm liking what I'm hearing so far,
Good.
but what about the downsides?
Of
What are
course.
some of those?
So one of the concerns that Screener highlights is a high price-to-book ratio,
Okay.
which is sitting at 5.55.
And what does that mean?
So that ratio compares the company's market value to its book value,
Okay,
which is essentially the value of its assets minus its liabilities.
gotcha.
A high price-to-book ratio could mean that investors have really high expectations for L&T's future growth.
Okay.
Basically, they're betting that the company is going to be worth a lot more in the future than what its assets suggest today.
Interesting.
It's not necessarily a bad thing,
Okay.
but it does add a lot of pressure for the company to perform really well and meet those expectations.
They've got a lot to prove. Okay, I'm writing that down. What's the other concern?
The other one is a low ROE over the past 3 years.
Okay.
It's at 12.4%.
Right. So that's a bit lower than their current ROE.
Exactly.
What do we make of that?
That could mean that there's been a dip in their efficiency in turning investments into profits over the past few years.
Okay.
Again, it's not a reason to panic,
Right.
but it's something that we should investigate further.
Gotcha.
We need to understand what caused that dip and if it's a sign of a larger trend.
Okay, so we've got some potential red flags to keep in mind.
Yes.
But before we go any further with this, we should remember that these pros and cons
Yeah.
are all generated by an algorithm, right?
Absolutely. They're a helpful starting point,
Yeah.
but they definitely don't tell the whole story.
Right. It's like having a GPS.
Yeah.
It can get you to the general area,
Exactly.
but you still need to use your own judgment to find the exact spot.
Exactly.
Okay, so before we get into the more detailed financials, anything else from Screener that we should be looking at?
Well, they mentioned that L&T is included in a bunch of different major indices.
Okay.
The BSE, Sensex, Nifty 50,
Mm-hmm.
a whole host of others.
So they're playing in the big leagues then.
Yes, exactly.
What does that tell us?
It tells us that L&T is a large and influential company.
Yeah.
Those indices are basically collections of the most significant companies in the Indian stock market.
Gotcha.
Being a part of those is a testament to their blue chip status.
Okay, that's really interesting. All right, so let's roll up our sleeves and dig into some of the financial data.
Let's do it.
So Screener has given us a snapshot of both quarterly and annual figures.
Okay, perfect.
So maybe we can start with the quarterly results.
Sure, yeah.
It looks like we've got operating profit, net cash flow, earnings per share, all the good stuff.
All the important numbers. And these are all given in rupees crore,
Right.
which is basically 10 million rupees.
Right. So we're talking serious money here.
Absolutely.
Looking at the operating profit, it seems to jump around a bit.
Yeah.
From about 4,000 crore to almost 8,000 crore over the past few quarters. What's causing these fluctuations?
That's a great question. It could be a number of things.
Yeah.
Remember, L&T operates in all sorts of different sectors,
Right.
each with their own kind of rhythms.
Yeah.
So we could be seeing some seasonal variations in demand.
Okay.
Maybe the impact of specific projects coming online or racking up,
Right.
or it could even reflect broader economic trends. To really
Okay.
understand what's going on, we'd have to dig into their more detailed reports
Right.
and look at things like investor calls.
Okay. Their profit before tax shows kind of a similar pattern.
Yeah.
But one thing that really jumps out at me is their tax rate.
Okay.
It seems to have changed quite a bit over the years, from a high of like 35% down to 22%
Wow.
in one recent quarter.
Okay.
So what's going on there?
That's a great question. Tax rates can have a big impact on a company's bottom line. Those changes could suggest that L&T is actively trying to manage their tax burden, maybe by taking advantage of some incentives or optimizing their corporate structure.
Okay.
So it's definitely something we should look into further.
Tax strategies noted.
Good.
Okay, so let's move on to the balance sheet.
All right.
Lots of numbers here. But the one that really catches my eye is total liabilities.
Yeah.
Over 3 lakh crore. That's a huge number.
It is, but we have to look at it in context.
Okay.
L&T is a massive company with operations all over the world.
Right.
A big balance sheet isn't necessarily a bad thing.
Okay.
The important thing is to understand what those liabilities are made up of.
Right.
Are we talking short-term debt, long-term loans, other kinds of obligations? And how do those liabilities compare to their assets?
Okay, good point. Speaking of assets, their total assets are also pretty impressive.
Yeah.
It's over 3 lakh crore as well.
Wow.
So it looks like, at least at first glance, that they've got the assets to back up those liabilities.
Exactly. The question is, how well are they managing those assets to generate returns that exceed the cost of their liabilities?
Yeah.
That's where those efficiency ratios we discussed earlier come into play.
Right. Okay, now the cash flow statement highlights something called the cash conversion cycle.
Yes.
What is that all about?
It basically measures how quickly a company can convert its investments in inventory and other resources into cash from sales.
Okay.
So the shorter that cycle is, the better.
Okay.
It means that they're managing their working capital well and getting cash in the door quickly.
All right, so how does L&T stack up?
This is where it gets interesting.
Oh.
Their cash conversion cycle is actually negative.
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 How is that even possible?
It means they're collecting cash from their customers before they have to pay their suppliers.
Oh, wow. That's pretty amazing.
Yeah.
What are the implications of that?
It's a huge advantage.
Yeah.
It's essentially like having free financing.
Wow.
They can use that cash to fund their operations, invest in new projects, or even return value to shareholders.
Okay.
It's a sign of a really well-managed company.
That's definitely a point in their favor.
For sure.
Anything else we should be paying attention to on the cash flow statement?
Take a look at the net cash flow figures over the years.
Okay.
You'll notice there's some pretty significant variation,
Yeah.
both inflows and outflows.
It's a bit of a roller coaster ride.
It is, but it reflects the nature of their business. These large projects that require a lot of upfront investment
Yeah.
and then generate revenue over time.
Okay.
But those swings can tell us a lot about how well they're managing their cash flow
Right.
and funding their growth and maintaining their financial stability.
All right. So we've looked at their quarterly results, their balance sheet, and their cash flow statement. We've seen some positives, some concerns, and some interesting things.
Yeah.
But I feel like we've only scratched the surface.
You're absolutely right.
Right.
These financial statements give us a good overview, but to really get a deep understanding of L&T,
Yeah.
we need to go beyond just these numbers.
Okay.
Remember those annual reports and investor call transcripts we talked about?
Yeah, they were supposed to be full of even more insights.
Exactly.
But honestly, they can be pretty daunting to get through.
Of course.
So what should we be focusing on?
Those reports and transcripts can give us a lot of valuable context
Oh.
that the raw numbers just don't provide.
Right.
They can offer insights into their strategic direction, the management team's thinking,
Okay.
the challenges they face, the opportunities,
Yeah.
and their plans for the future.
So it's like getting a behind-the-scenes look at how they operate.
Exactly.
Sounds pretty crucial.
Yeah.
But with so much information out there, where do we even start?
Don't worry, we'll guide you through it.
Okay.
We'll highlight the key takeaways from those sources and connect them back to everything we've already talked about.
All right, I'm ready. Let's see what those reports and transcripts have to say about L&T.
Let's do it.
Yeah.
Okay, so let's take a look at those annual reports and investor transcripts.
All right, it's like we've done the walkthrough and now we're going backstage.
Exactly, and there's some interesting stuff in here.
Okay.
You remember that high PE ratio we were talking about?
Yeah.
Well, the investor presentations really highlight L&T's push into new areas like green energy
Okay.
and digital infrastructure.
So they're betting on those sectors to drive future growth.
Exactly. They're hoping to be a leader in those emerging fields.
Okay, but isn't that kind of risky?
There are definitely risks involved,
Yeah.
but they're really leveraging their existing expertise, in engineering and construction
Okay.
to position themselves in these new markets.
So they're not starting from scratch.
No, not at all. They're building on what they already know how to do.
Okay, that makes sense.
Think about it. They're already involved in big infrastructure projects.
Right.
Now they're just applying that knowledge to things like wind farms and data centers.
Okay, but what about competition? Aren't there already a ton of companies in those spaces?
There's always competition, but L&T is hoping that their scale, their experience, and their reputation will give them an edge.
Okay.
And it's not just about organic growth.
What do you mean?
The transcripts talk about a lot of strategic acquisitions and partnerships that they've made in recent years to strengthen their position in those areas.
Well, they're playing the long game here.
Exactly. They're thinking about the future.
Okay, but I noticed that their profit growth hasn't always been that impressive.
Right.
Especially compared to their sales growth.
Yeah, that's a valid point, and the investor presentations actually address this directly.
Oh, really?
Yeah, they explain that some of their investments in these new areas haven't become profitable yet.
So they're spending money now to build capacity and market share,
Exactly.
but that's affecting their short-term profits.
Right, but they're confident that those investments will pay off down the road.
Okay, that seems reasonable. But what about the risks? Investing in these new technologies and markets could be really unpredictable.
You're absolutely right. There are always risks.
Yeah.
And the transcripts do acknowledge that.
Okay.
Like in navigating regulatory hurdles in new markets,
Right.
managing the integration of new companies that they've acquired,
Yeah.
and even dealing with the potential impact of, technology changing really rapidly.
So they might be a leader now, but they need to stay ahead of the curve.
Exactly. They need to be agile.
Sounds like their management is aware of all those risks and trying to plan for them.
It does. They seem to be taking a measured approach.
Okay, that's good.
So let's shift gears a bit
Okay.
and go back to that negative cash conversion cycle we were talking about.
Yes, I wanted to come back to that.
Yeah, it's really interesting.
It is. It's such an unusual situation.
Yeah, and the annual reports give us some insight into how they do it.
Okay.
Basically, they have really strong relationships with their suppliers,
Okay.
and they're able to negotiate favorable payment terms.
So they're getting extended credit from their suppliers.
Exactly, which frees up their cash flow.
That's pretty impressive.
It is. It seems like a win-win.
Yeah.
But it does depend on their size and reputation.
Right.
So if their financial performance were to suffer, those terms could change.
Ah, so it's not a guaranteed advantage forever.
Right, exactly.
Okay, so we've talked about their strategic direction, their growth prospects, and their risk management.
Mm-hmm.
What else is in these reports and transcripts?
One thing that stood out to me was their focus on sustainability.
Okay.
It's not just lip service for them.
Yeah.
They're really integrating environmental and social considerations into how they do business.
Wait, so they're trying to be a good corporate citizen.
Exactly.
What kind of things are they doing?
They're investing in renewable energy projects.
Okay.
They're adopting sustainable construction practices.
Mm-hmm.
They're focusing on community engagement.
You know, that's actually really important to me.
Yeah.
I'm more inclined to invest in companies that are, aligned with my values.
Absolutely. It's becoming increasingly important for a lot of investors.
Yeah.
So it's good that L&T is taking this stuff seriously.
It seems like they're ahead of the game.
Yeah, I think so.
Okay, so we've got a company that seems to be doing well financially.
Mm.
They've got a solid plan for the future.
Yeah,
And they're committed to sustainability.
it seems like it.
But they're not without risks, are they?
Definitely not. We've talked about the challenges of investing in new markets,
Right.
managing that kind of rapid growth.
Yeah.
And then there's always the potential for technology to change and disrupt things.
Right. And we can't forget about the broader economic and geopolitical risks.
Absolutely. Things like an economic slowdown in India or even globally,
Yeah.
things that could impact their project pipeline.
Right.
And then there are always geopolitical risks.
Yeah.
They operate in some parts of the world that are a little bit volatile.
Wow. Okay, so it seems like L&T is a very complex company. So how do we take all this information and figure out if it's a good investment?
Well, don't worry.
Okay.
We're going to break it all down for you.
Okay, good.
We've covered a lot of ground,
We have.
but there are still a few more crucial pieces of the puzzle.
All right, I'm all ears. What else do we need to consider?
Mm-hmm.
So we've talked about their financials, their growth strategy, the risks. It feels like a lot to keep track of.
It is. There's a lot to consider, but the goal here is to help you figure out if L&T would be a good fit for your investment strategy.
Okay, so let's put it all together and see if we can draw some conclusions.
Sounds good. So we've got the positives. They have a really strong track record. They've got a diverse portfolio.
Yeah.
They offer a decent dividend.
Right.
And they seem to be making smart moves by investing in areas like green energy and digital infrastructure.
Yeah, and they're doing a great job managing their cash flow.
Right.
Plus, they're committed to sustainability, which is great.
Absolutely. But we have to balance all that against the downsides.
Right, like what?
Well, their profit growth has been kind of inconsistent.
Yeah.
And they're facing a lot of competition in those new markets. There's always a chance that those investments won't pay off the way they hope.
Yeah, and we can't forget about those broader risks,
Right.
the economic and geopolitical stuff.
Absolutely. So how do we weigh all this?
Right, that's the big question.
It comes down to your own personal investment goals and how much risk you're comfortable with.
That's a good point.
Are you looking for a safe bet that pays regular dividends?
Mm-hmm.
Or are you okay with a little more volatility
Right.
if it means there's a chance for higher growth?
I guess it depends.
Exactly. And L&T is not really a set it and forget it kind of investment.
Oh.
It requires you to pay attention and do some analysis.
So it sounds like L&T's management team is really important here.
Absolutely.
Do they have a track record of being able to adapt and make smart decisions?
Right, because they're making some big changes.
Yeah.
So it's crucial to understand if they can pull it off.
How do we find out more about their management team?
Those annual reports and investor transcripts are a good place to start.
Okay.
You can also look for articles and analysis from, reputable financial publications.
Right.
Get a sense of their experience and
Right.
how they've dealt with problems in the past.
What about valuation?
Right.
We talk about that high PE ratio. Does that mean L&T is just too expensive?
Well, a high PE can be a sign that investors have high hopes for the future.
Right.
The question is, are those hopes realistic?
So is it worth the price?
Exactly. And there's no easy answer.
Okay.
You have to do your research,
Right.
look at everything we've talked about,
Yeah.
and then decide if the potential rewards are worth the risk.
Well, I think we've given our listeners a lot to think about.
Hopefully.
But before we wrap things up,
Yeah.
what's your main takeaway from all this?
Well, I'd say that L&T is a company with a really strong track record. They're
Mhm.
making strategic moves to grow,
Okay.
but those moves do come with risks that investors need to seriously consider.
That's a great summary.
Thanks.
It really highlights how complex this decision is.
Yeah, and that's really the key point here.
Okay.
There are no simple answers when it comes to investing.
True.
It takes work.
Yeah.
And you have to be okay with dealing with complicated situations.
So we've provided our listeners with some tools and information,
Right.
but ultimately the decision is up to them.
Exactly.
They need to think about everything we've discussed,
Mm-hmm.
consider their own risk tolerance.
Yeah, and choose what they think is best for their portfolio.
Well said.
Thank you.
Okay, so on that note,
Yeah.
we're going to wrap up our deep dive into Larsen Toubro.
Right.
I hope you found this discussion helpful
Me too.
and that it will help you on your investment journey.
Good luck out there.
Thanks for joining us.